Hello and welcome to this weekly update for Sunday, May 24th, 2020. I know the market didn't crash this week. Remember, this week was just the start of the turning point. This is why I issued a dip alert to sell the high. In any trade, you want to sell the high and buy low. So right now we want to sell the high and wait for the dip to come. Now, if you look at the Dow from the daily perspective, you can see the price shot up on the 18th. Almost in defiance, not wanting to crash. But that was it, and the price just went sideways before dipping on Friday just a bit. And that's okay. The number we need to pay attention to is 24,764.77. That is the current resistance. That is the highest high since the low of March 23rd. And even though we had that big pop on Monday, the price never exceeded 24,764.77. Switching to the weekly view to remove the daily volatility, you can see that even from the weekly perspective, the Dow has not made a new high. Close, but still no new high. Let me change the time frame to better explain where the 24,764.77 number is coming from. This chart is from January 2020 through May 22nd. Again, the market crashed and made a low on March 23rd, 2020. Since then, the market made three higher highs, and that third higher high is the highest intraday price achieved since the low of March 23rd, 2020. As I've mentioned plenty of times before, in order to sustain a bull market or rally, higher highs and higher lows have to be made. Since the low of March 23rd, the Dow has made one higher high, one higher low, then a second higher high, and a second higher low, and finally a third higher high and a third higher low. But you see, the rally has clearly stalled. Again, no new higher highs have been made, and in fact, last week we broke through the support from the second higher low. The next support is the previous higher low or first higher low, or just under 21,000 points. Two things must happen in order for there not to be another stock market crash or dead cat bounce or retest of the March 23rd low. First, we have to close above 24,764.77. Second, we have to close above the previous high before the crash, which was 27,102.34. Otherwise, we're just going to test some previous lows, starting with last week's low of 22,789.62. And if we break that support, the next support is the April 2nd low of 20,735.02. And if we break that support, the next support is the March 23rd low of about 18,213.65. And if we break that support, well, if you're a subscriber, I'll let you know so we can buy the dip together. Remember, you have to keep in mind the 8.6 time frequencies and the zigzag or seesaw between highs and lows during those turning points. Keep in mind the recent turning point on January 20.05 or January 18th, 19th. That was a high. And if we move forward 8.6 weeks, again, as I've shown, we arrive on March 23rd, which was a low. And if we move forward in time again, 8.6 weeks, we arrive to this weekend and where we're at the recent market highs. So we have gone from a high to a low to a high, and now should come a low during the next 8.6 week period, which will take us past mid-July. These next 8.6 weeks are going to be very volatile because we could still break through 24,764.77, but not break the 27,102.34 level and actually fall all the way back down to test the lows from those higher levels. If the market were to rally more and then fall back and retest the March 23rd low, then people would really be scared of the stock market and creating the perfect storm for a huge buy the dip opportunity. Moves that big would create a lot of volatility, and this would definitely help my VIX trades. So to recap, we just arrived at this next 8.6 weekly turning point and trading close to the recent highs since the March 23rd low. This is why I issued a dip alert. Again, to sell the high, in any trade you want to sell high and buy low. During the next 8.6 week cycle, the Dow should ideally produce a low between now and July 24th. If the market doesn't make a low and keeps rattling, then the immediate first resistance level that needs to be broken is 24,764.77. The next resistance level is 27,102.34. We have to break this level and hold in order for the March 23rd low to hold and remain in place so the market keeps rallying. Otherwise, we're just testing lows again, and the immediate first support level is 22,789.62. The next support level is again 20,735.02. And finally, the last support we have is the March 23rd low of 18,213.65. Now, switching to gold, gold is actually in the same position as the Dow in the sense that it's made some higher highs with higher lows, but hasn't broken its recent higher resistance. Gold's current resistance is 1,788.80, which was achieved on April 14th. The next resistance is 1,798.10, achieved all the way back on October 5th, 2012. The next resistance after that is 1,804.40, achieved on November 8th, 2011, and the last resistance holding gold back from making all-time highs again is 1,923 with 70 cents, achieved back on September 6, 2011. But gold looks like it's going to test some recent lows though instead of testing highs. If it does, its first immediate support level is 1,676, followed by support at 1,666.20 cents, and then support at 1,576. I don't think gold will get this low, but it's possible. As I've mentioned before, gold's true bull market doesn't even begin until it passes 1,923.70 an ounce, which was its old previous high. There is a sequence to asset class cycles, so just right now let's make money on the Dow and convert that to more gold and silver later. Have a happy Memorial Day, and thank you to all our service members for your sacrifices.